Welcome, my name is Mike Hamilton from Trade the Easy Way, and I'm going to walk you through the markets here at coming up to 1 o'clock Eastern Time, 6 o'clock PM in the UK on the 22nd of September. And so this is the volatility index, the fear measure, and we are nice and low. You can trade this just like any other market, but so we are range bound and staying on the low side. Dollar index, so we had rate decision last week. Dollar is at highs, these highs on the dollar sold, and so we came down and tested 96, and we look as if, having gone up to the 50-day average, we are heading back down south again. So range bound, as long as we stay in that range and don't start shooting up or don't start really collapsing, then in theory the markets should be good to go. So before we look at anything else, I'm just going to go over this wheat. This is my nemesis. So we've got this huge trend line coming down from May 24, which we breached it, and then this spring high, midsummer high, and of course we've got a series of lower lows. So this is a huge support down here at 515. It looks likely that we're going to want to touch $5 at this stage. So I've just redrawn this. So all the time we are under the 50-day average, under the trend line, making lower lows. It does look as if we could see this slipping down to the 5 mark. At some stage in the future, now whether that's weeks, months, or even a year or two, this wheat is going to fly and get back to 10 and go some. But in the meantime, if I pull back, you can see this is just not doing it. Alright, so for this to really get going, we need at least 550, a close of 550, which would put us, if I go from $5 to 550. So if any time soon we get above this 550, then I think we can at least pop to 650 and then potentially start to do something with this. It's very rare for a stock market to be so bullish and commodities to be so weak. Here we've got oil. Okay, we've got a lot of electric cars in the market, but there's still a huge demand for oil, heating, goods transportation, all sorts of shipping, all sorts of things, and yet this oil is just flagging. It's a very nice base here, so if we hold this 61, then I think we can start to make our wind up to 70 again. But in the meantime, all this could so easily just roll over and go and find 55 and go and find 50 if that fails here. Not a lot of data. We've got US GDP on Thursday. Not a lot on the earnings front at this stage. We've got MU in the US after the close tomorrow. We'll take a look at that in a minute. So this is the Dow. I think all indices last week made a new high. So we look as if we are going to go and find 47k now. Any pullbacks to 45,950 or 45 are to be bought, unless we close under there sometime soon, but everything indicates that all the dips in this market can be bought. 47 is next. We could, if things go really well, end up at 50 year end, but let's just take it one step at a time. In terms of the Elliott wave, so we had a 3-wave correction into April. We had a 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3. Wow, okay. We are eking up. It's difficult to do wave count on the hoof like that. Well, this is not a particularly easy one. Moving on swiftly, this is the FTSE. So the FTSE's come reconnected with the 50-day average down here at 92. We're just 92.37 as we speak. So if we can come back to 93.76 and hold or breach, then I think we can go and find 95. Okay, so this bodes well. This is good support here. As long as that holds and we don't start closing on 92, we are higher. Right, stocks. Let's go and look at this one as an example of the way I plan and plot my charts. So I suggested you might want to dip into this on this recent low here. I got it at 135. I think it touched about 131, 132. We're currently 141, just touching that 50-day average. So what we've got here is a 1, 2, 3, 4, 5 and a 1, 2, 3 wave correction. So having had such an aggressive wave 1 and a very, very bullish wave 5, I think once the correction was over, this was well worth a trade. So if we can break through 145, 150, I think we can get back to these highs, and who knows, 170 plus could be on the cards. The other side of this is, well, a couple other things to look at this. You can see this pink band way back here in September 24 was a support zone which failed. It succeeded, it held in summer 24 and then failed in late September 24. So that's why these lows were interesting to me, plus the fact that we were coming in here and we had higher volume down here. You see I've got a moving average on the volume just to try and accentuate that. As long as the volume continues to hold here and get higher, I think we've got the momentum to go back to these highs and beyond. So several factors that got me interested in this, the support zone, the wave count, the fib ratios, the RSI was very low down there at the time I suggested it, and the volume has improved. So all these things are ticks for me, which suggests that that could be a good move up. SSP group is very similar, very swift, 1, 2, 3, 4, 5 move upwards, 1, 2, 3 wave correction, another impulsive bar, wave pullback. So if this wave 2 holds, and wave 3 could take us into 175 plus on SSP group. If at any time that starts to get under 150, then the very best, you should be cautious, if not get out. Here's 150. Come and touch 150 and hold, then that could help us project it back up to these highs. That's why I like SSP group. Softcat, I did get back to moved up to 1650, so a lot of resistance up there. I went back to my entry point, so rather than get out, I did stay in this. If I wanted a swing trade, then I should have been getting out at 1650 and potentially getting back in down these lows. But it's above my entry point. If we can come back and attack 1650 and hold, then I think we can see 17. 17 is going to be a sticky wicket. There's a lot of resistance up there. There's a drop zone up there at 1727. But I'm expecting to see 17 sometime soon. If that can really get going, we've got a gap up there at 19. And much longer term, I would expect to see this above 2021 if it behaves, if it does what I want it to do. But by peeling back, you can see what's such a strong move here. A couple of very, very decent, 3 really decent legs up there. So they came from this point here, 1450. So if this doesn't hold, 15 doesn't hold, then obviously we're going to see 1450 pretty quick. But yeah, if this trend line holds and we break above this channel, then I think we can get going. But close under 15 and could see a deeper pullback. Volume has been improving. I would want to see that get above that 140 mark with a higher number. So these are the things to watch if you're in these trades. I'm stopped out of this. I was in EasyJet. We looked okay here. I thought this 475 was going to hold. Volumes improved, but then they took it back down again. A lot of issues with drones going into Polish airspace and aircraft going into NATO countries, which I think that's the reason why this is weak. But this is a huge fib ratio support down here at 445. So if we see high volume in the next couple of days, this could be salvaged. Otherwise, we're going to see £4 again on EasyJet. Okay, I'm going to leave that there. So I've talked about a few stocks I'm in, and nothing else of note at the moment. But so markets are holding up. The US is making higher highs and new highs. So if that keeps up, that bodes well as we get towards GDP and some services data this week. All right, stay tuned. Bye for now.